Warren Buffett has said that the most important quality for an investor is temperament, not intellect. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd. Hello and welcome back to Exploring Finance with Prashant. I am thrilled to have you here as we continue our exciting journey in the world of financial shenanigans. In the previous episodes, we have discussed a lot about the manipulations done by the companies, and in the recent episodes, we have discussed about the acquisitions and the key metric manipulation. This is probably going to be the smallest episode of this series because it is the last episode of the season 1 of my podcast. We shall take a look at all the things we have learned in the past 17 episodes and the key learnings that we should keep in mind. In this journey of financial shenanigans, we saw how companies manipulate the key metrics, how companies use non standard metrics to manipulate the customers, and how they try to use cash flow to inflate their earnings, how the items of financial statements are manipulated to get a better picture, and how management put a lot of makeup before and after acquiring companies so as to look pretty in front of shareholders. We explored many more items along with real life case studies. You can know more about them and in more detail with much more explanation in the book, which is the inspiration of the season 1 of my podcast. The name of the book is Financial Shenanigans by Howard Schillit, Jeremy Peller, and Yoni Engelhardt. This is not a promotion and certainly not a paid promotion of the book. This book was suggested by one of my good teachers, and when I read the book, I was totally amazed at how companies engage in these kind of manipulations and wrongdoings, and how can we identify them. This is one of the very good books. And why is this done? This is also very important. Initially, investors of these companies cheered when they showed those inflated figures, but slowly, when all the wrongdoings, all the manipulations, all the shenanigans performed by these companies came in front of the world, they started panicking. Till then, they were enjoying the share hikes, but now they were panicking, they were afraid of the share price plummeting. That's why it's important for you and me and for every investor out there who believes in long term investing to be very skeptical when it comes to companies and showing their results. It is very important to look at each and every figure, because if we do not look at each and every figure, there will be something that we will be missing. We have seen many cases in this season and learned how they manipulate earnings, for what reasons. I am not going to say that I hope that now you are able to grasp everything, now you are able to identify each and every shenanigan. I'm not saying that you have become an expert, but I do hope that you have started learning about these things and how you can be a more diligent and informed investor from starting to the end. Here are the key learnings that I want us to remember always. I am not saying that I always apply them. Being a human, sometimes emotionally we take decisions, but I would say that most of my decisions are based on this. But still, there is a lot of improvement that I need to, because I am also a beginner in investing. So, here are the things which I want us to exercise as much as possible in our investing tactics. First, skepticism is a competitive advantage. Being skeptical in financial markets where positive news prevails can help us to detect discrepancies and avoid market bubbles. Pay close attention to changes. Scrutinizing the changes in the company's financial landscape along with understanding why now. It will aid us in uncovering the motivations and the implications behind that. Second, pay attention to corporate culture. Corporate culture that prioritize meeting short-term targets can create environment that is conducive to fraudulent practices. I don't think we need to take the name, but still I would like to say I hope you remember Dunlop AI. Fourth, pattern of behavior provide a reliable signal. Recognizing patterns in the executive behavior can help identify potential issues as past behavior often repeats. Fifth, be humble and curious. Investors are encouraged to remain open to learning, recognize mistakes, and continuously improve their analytical skills. Sixth, the forensic mindset is crucial for detecting the accounting gimmicks and fraud in the financial statements, and it incorporates qualities of skepticism, curiosity, humility, and an understanding of human behavior. The forensic mindset is also crucial for identifying that this is done, but why? What will be the effect of this specific manipulation, of this specific change in the financial statements or in the other books of account? The don't try to judge. This is the seventh one. Don't try to judge the company based on its share price. Just because the share price is high doesn't necessarily mean that the company is good, and vice versa. Even if the share price is low doesn't mean that the company is a bad company. 8. Please don't trust on the tips given on different social media platforms, because not every tip is going to give you benefit. That doesn't mean that you should try every tip and you might end up having huge losses rather than benefit. So please don't do that. Ninth, don't stop learning. Start learning from each and every place you can find. You needn't understand everything, but you will understand at least 5% or 10% of whatever you are learning from. It can be the podcast, it can be YouTube, or it can be any other place. The last one, read as much as you can about these things if you have interest. Only when you start reading them about how companies are manipulating their financial data and what are the reasons behind them, how in different ways, how can we identify these things, and how can we be more skeptical, and how can we identify these things in advance, and how to make up such sources, good sources that can help us in these things, finding these things. So do at least read these books. And I would again say that please do at least read the book Financial Shenanigan, because it is one of the good ones. And here comes the end of this episode and season 1. Just a small request for you guys. As I said, I am a beginner investor, but I am also a beginner podcaster. This is my first podcast, first season. I do hope you learned something from this, and I hope for your feedback on the whole season. I want to get better at it, so do put your valuable feedback in the comment section and let me know in which areas I can improve. Also, do suggest me ideas for season 2. Thanks for listening to this episode and completing the whole season. See you in the next season. Until then, keep questioning, keep learning, and keep exploring the captivating world of finance. Thank you. Have a nice day.